I'm Matt Bichard with REIT.com, here for REITWeek 2013. Joining me for this edition of CEO Spotlight is Sam Landy, the President and CEO of UMH Properties. Sam, thank you so much for joining us.
Thank you. Glad to be here.
Now, your company's reported a strong jump in occupancy rate so far this year. What's driven those results?
I think it's important to understand the product. The manufacturers, Skyline, Eagle River, Cavco, they make a fantastic product. A 980 square foot, 3-bedroom manufactured home or a 28 by 60 manufactured home. It's a 2 or 3 bedroom house. The 980 square foot house costs us $40,000. You put the $40,000 house on a $40,000 lot, and it's very hard for an apartment builder or apartment owner to compete with us. If they're paying $200,000 for 980 square feet, and we're paying $80,000 for 980 square feet, we could rent our homes out at $750 a month, where they have to be over $1,000. And if we look at the markets we're in and we rent our homes for at least $50 per month less than equivalent apartments, we generally generate a waiting list, and that's what's increasing occupancy. The Dodd-Frank and the SAFE Act, they've made it very difficult to finance homes. So it's very hard to sell houses, and we of course prefer to sell them, prefer that every home is owner occupied. But it took us time to wake up to the reality that with these new laws, it's very hard to sell homes, therefore we need to do rentals. We've done the rentals. We've filled about 200 units last year, and we're going to put in 200 new rental units this year, and that's what's generating the occupancy increases.
And UMH has also been active in terms of acquisitions so far in 2013. What types of deals are you looking for, and do you expect this pace to continue?
Well, in terms of what deals we're looking for, we were at about an 8% cap rate. We're looking for upside, meaning if there's vacant sites, that's a benefit to us. If we're buying at an 8 cap and there's 100 vacant sites, that's a place where we can generate sales income, add rentals. We finance homes. We can make money on financing. We can make money on sales. So we've done some acquisitions, Indiana and Tennessee, where people built 300 space communities, sold about 150 homes in the good times, couldn't sell during the bad times, and wound up selling the communities to us at 8 caps. So the upside is substantial should we fill those vacant sites. Finding deals in the future, it's getting tougher and tougher. Prices are rising, cap rates are coming down, but everybody talks about this great wealth transfer that's going to occur, and that great wealth transfer could generate individual deals for us. In other words, the portfolios, there's so many people looking at the portfolios, but in the states we're in New York, New Jersey, Pennsylvania, Ohio, Tennessee, and Indiana. We know the associations, we know people, so there is a possibility of us continuing to generate deals through the wealth transfer.
And lastly, we hear a lot about the fundamental drivers in the single family as well as the apartment markets, but are there any unique trends or factors at play in the manufactured home market that may be moving it that people may not be aware of?
The manufactured housing product is better than it's ever been. The interest rates on the manufactured homes are coming down. Triad just announced today lower interest rates than I've ever seen on manufactured home loans. Our ability to manage communities, UMH has been in business since 1969. We've sold almost 2,000 homes. We've financed 20 million in sales. We have the ability to sell houses and make a profit on sales, use these vacant sites to make more money. But what we need is the industry turnaround. Some of it is going to come from people, the 55 and older communities that we've built that have expansions. We need people to be able to sell their conventional home. They could sell their home for $300,000, buy a house from us for under $100,000, and live off the rest of the money. Then we need the other people to have jobs so they can qualify for financing. But if you look at this business, the 1960s, 70s, 80s, 90s, shipments were 200,000 a year. You have Warren Buffett's in the business, you have Jim Clayton in the business. Art DCO was featured on the cover of Time magazine for bringing affordable houses to the masses. It's a great business, and the government programs have shut us down for 9 years. UMH is positioning itself for the turnaround, and we're going to be ready for the turnaround, and we just need it to start.
Sam, thank you so much for joining us.
Thank you very much.
For more on this and other REIT news and analysis, be sure to visit REIT.com.